Hi, today's video is not going to be that long, but I am a nerdy number nabob, and I just got my hands on the Charlottesville-area first quarter market report. This is first quarter for 2025, and I'm not going to go through it page by page, and I'm not going to give you all the details. If you want to see the actual report and dive deep into it, go down that rabbit hole. I'll have this posted in the description with a link where you can find it. However, this was prepared by the Virginia Association of Realtors based on data taken from our local MLS and other sources. The first thing that VAR likes to look at in any of these reports is what's happening nationwide, statewide, and in the local area as far as the economy is concerned. So things like unemployment, what's going on with fixed mortgage rates, and then they'll dive into what's going on with the housing market, like sales volume, dollar volume, break it down by area. In the greater Charlottesville footprint, we've got 5 counties plus the city of Charlottesville, so there's 6 different metrics there. And they'll look at the area as a whole, and then they'll break it down county by county plus the city of Charlottesville. Anyway, here's kind of a synopsis. Let me read this off to you. Economic figures in our footprint, that's those 5 counties plus the city of Charlottesville. The unemployment rate is 3%, which is up from 2.5% first quarter of 2024. So still not bad, it's up a little bit. And the report goes into a bunch of reasons why it would be up in Virginia overall. Doesn't really delve into too much of what happens in this area, but it talks about which sectors, if you're really into that sort of stuff, which professions had an increase, which ones had a decrease, that sort of stuff. But unemployment, just as a big, overall figure, 3% for the area, first quarter 2025. And then fixed rate mortgages for the quarter average 6.81%. This is a 30-year fixed. If you do 15-year, it's going to be a slightly lower interest rate. There's all kinds of factors that go into this, but when they do an overall aggregate, 6.81%. Now, how does that compare to the first quarter of 2024? That was 7.17%. So a little over 0.3 of a percentage point decrease. But the important thing is that rates have somewhat stabilized from what we were seeing 2 and 3 years ago. So yes, we've had highs. We were really enjoying some lows right around the time of COVID, 2020, 2021, 2022. And there was a lot of home buying going on during that time. Then all of a sudden the rate shot up. Now it's come down, not a whole lot from the peak, but it has stabilized. And that's going to have a big effect on a number I'm going to give you later on in this video. So watch out for that. Stay tuned. We'll explain that one further. As far as the housing market and the CAAR footprint, here's the numbers. One more home sale in 2025 first quarter than we had in the first quarter of 2024. One more. I think we went from 694 home sales to 695. However, sales volume's up because the median sales price went up by 3% compared to a year ago. Is this a big gain? It's actually pretty modest considering all the growth that we had from 2020 to 2022. 3% year over year in a quarter. That's something to keep an eye on. So they say typically over the long term, real estate grows by 4%. We had 3%. And this is in an area, especially if you look at Charlottesville and Albemarle, where numbers had been increasing at a very fast rate, approaching double digits. 3% is kind of low. And I think we've actually had some regression in Albemarle and Charlottesville. Again, more on those later. So 3% growth in median sales price. So that resulted in $4.5 million more in total sales volume. Here's a big one. 30% increase in the number of active listings from first quarter 2024 to first quarter of this year. 30%. More on that later. And then the months of supply rose from 2.2%, not percent, 2.2 months of supply to 2.9 months of supply. Now, let me talk about that a little bit. In the past, when I look at these numbers on a month-by-month basis, in some parts of the CAAR footprint, we got down to under a month worth of supply, Charlottesville and Albemarle. And anything that came on, I think the median numbers as far as days on market was just way down. It was a week or less. which is buyers didn't have time to do anything. If they saw something, they would have to snatch it or else, and they would have to compete, multiple offers, all this sort of stuff, or else they would lose it. That is changing. That has cooled off, and the months of supply, I think one time I saw it as low as 0.8 months, so I was joking. I said, hey, now we're measuring weeks of supply instead of months of supply. To give you a little perspective, when I got in the business, I've always told, and this has not changed really, is that for a balanced market, buyers and sellers, to be balanced, you need somewhere between 5 and 7 months of supply. We haven't seen that in years. So the fact that we're going back up, and also what's helping that is that increase in active listings. So we've got a 30% increase over year. That's helping that months of supply. And you're also going to see, I'm going to point out a little later, that the days on market figure overall over the footprint area has increased. It will be up and down depending on which particular locality you're looking at. But overall, we're seeing a slight increase there. All right, there's stuff in here about economic overview and more information on the unemployment rate. I said 2.5 last quarter. It was actually 2.9%. So in Virginia, it was 2.9, went up to 3.3. National rate went from 4.2 to 4.5. We still have good employment in the area, and even though the unemployment numbers have gone up, it's not a huge percentage, and it's not, certainly we're doing better than the Commonwealth of Virginia, and definitely doing better than the rest of the country. So this is still a good area for employment. And just the fact that the numbers going up, I think you're going to see from one quarter to the next, you're going to see small fluctuations. And this is what we're looking at here. This is an interesting one. Residential permitting activity is up so far in 2025. There have been, I'm reading this to you from the report, 358 building permits in the region year to date for through March of 2025. And this is a 17% increase from the same time last year. So home builders are building more. As of April 24th, when they looked at the number, the average rate for a 30-year fixed mortgage was 6.81%. Okay? The rates have stayed below the 7% threshold for 13 consecutive weeks, but rates have been drifting up since mid-April. A year ago, the average rate was 7.17. That's what I mentioned earlier, which was the highest it reached for the entirety of 2024. So highest rate in 2024 was first quarter of last year, and now we're down at 6.81%. It's creeping up. What we're seeing, and I'm talking to lenders about this, is you'll see it creep up a little, and then some weeks it'll creep down. So we're kind of getting this leveling off effect, and that's having the effect of putting some stability back in the market, removing some of the uncertainty, because buyers and sellers are concerned with this. Why are sellers concerned with the interest rate? Because 80% of those who sell also have to buy, which means getting another mortgage in a lot of cases, and they're concerned with that. If they think that it's going to level off, it's not going to go skyrocketing like it did 3 years ago, then maybe now's the time to sell and move, because there are always pressures on people to move. At some point, those pressures become too much over time and they have to do something. So with a little more stability in the interest rates and creating a little more certainty on the part of sellers and buyers, then you're seeing this. And I think that this is one of the things that might be leading to this increase in available inventory. More on that later. Here was a chart. I'll show it to you here, and you can look up and, tea leaves and get the fine detail. Click on the link down in the description to get the report. First quarter home sales in the entire footprint. This quarter was 695. Like I said, that's one more than last year. Going back to 2023, we had 688. So we've got 3 first quarters here, low numbers. Why do I say they're low? Let's look at first quarter 2022. 888 homes sold compared to numbers just under 700. And 2021 first quarter, there was 1,065 homes sold in the first quarter of that year. So again, this has been a dropping chart. Is it recovering? Well, it's not dropping any further, okay? But remains to be seen what this increase in inventory is going to do over, in the rest of the year and what happens in 2026. So you'll have to stay tuned for that report. Now we start getting into change in sales by jurisdiction. Nelson County, Fluvanna County, Greene County. Big, like Greene County went up 10% in units sold. Nelson County, 14%. Understand it doesn't take a whole lot of extra units in Nelson because they don't have a high sales number or volume in Nelson County. But they went up by 14%. The big surprise is Fluvanna County, which has Lake Monticello, 4,400 rooftops there, and that's about 40% of the county. There are other places in the county, but Fluvanna County went up 39%. Now, Louisa dropped 7%. Albemarle County, 5%. Charlottesville dropped 19%. That's the city for you. We have other information. First quarter new construction sales, new construction median sales price. The thing that interested me about that graph, the median sales price of new homes actually dropped by 5%. So builders are feeling the pinch a little bit to stay competitive, okay, because they're competing with the higher interest rates, and to be able to push the product, they have to have what they're building at a competitive price. So to say that they always go up, not necessarily the case. And here's the interesting one. Median sales price was $450,000 in the entire CAAR footprint. This is up about $15,000 from the year before. So there's our 3% increase. So do we have growth? Yes, in terms of price, median price. Is it a big number? No. And now that inventory is increasing, we'll have to see what happens with that. I do have a lot of people ask me from time to time and said, when is the market going to crash? Folks, the market is not going to crash. What you're going to see is a moderating of price growth, I think. This is my prediction. And in some areas, you may see some reduction in asking prices, list prices, and actual sale prices. The one thing we are noticing, and I am noticing when I talk to other agents in my office and in this area, is that the ability for a buyer to negotiate has come back now. So it's no longer multiple offers, offers a list price, and let's get this auction going and pay whatever. Is people are now having a little more time because we've got a few more days on market. Not as many offers coming in, and the buyers are able to come in and negotiate maybe something a little less than a list. First quarter sales price range distribution, the vast majority of homes sold, and this was first quarter last year as well as this year, it was in the $250,000 to $500,000 price range. It doesn't surprise me. The next one is $500,000 to $750,000, okay? Now, under $250,000, it's getting harder and harder to find something below $250,000, and those numbers actually dropped off. I think that's really just a result of if those dividing lines, those dividing prices, demarcation lines stay the same, and as numbers grow, we're going to see, this peak over time is just going to go further and further up, unless they change the numbers here on the scale. So that's that. Things like sold volume, break it down by county. It's interesting. So looking at first quarter median days on market and breaking it down by the market segments, the footprint. Albemarle County went from 7 days to 8 days on market. Charlottesville went from 7 to 14. So 14 is not a big number, but it's double what it was last year. Okay. Fluvanna grew by 3 days, 14 to 17. Greene County went from 46 days on market to 11. Okay, so I don't know what's so hot about Greene County, but its numbers, if you look at them, its numbers were higher for the quarter over the prior year. Louisa County went from 49 days down to 40. No big thing there. And Nelson, wrapping this up, went from 48 days on market down to 40. So it's not like it's taking forever to sell houses. The demand is still there. Prices not jumping up all that much. I think we're seeing a leveling off. Interest rates as well. Again, with the inventory that's coming on, what I'm really looking for is what's going to happen in the second quarter. Active listings. This is, again, a breakdown. Nelson County had 80 at the end of the first quarter last year, and they're up to 94. Louisa went from 95 to 257. Nice hike there. Greene County actually dropped 50 to 38. Fluvanna, 43 up to 73. That's quite an increase. Charlottesville, not quite doubled, went from 49 to 86. So how much are we talking there? That's almost a 60% increase. Albemarle went from 255 to 327. People are on the move, folks. Okay, so I'm going to say about this, the rest of the report, local snapshot, they cover the different jurisdictions and they talk about sales, median sales price, sold dollar volume, active listings, and days on market. So if you really want to nerd out on this stuff, that's in the report. Again, the link is in the description. The biggest takeaway I have on this is what it doesn't say, and we don't know that until next quarter, when we see what is going to be the effect of a 30% increase in available inventory. What effect is that going to have on sales volume, number of units sold, sales price, days on market, all this sort of stuff. Real curious to say, because second quarter traditionally, historically, has always been a busy one. And with that kind of inventory, if people are looking to move, there is a whole lot more selection. And if you're thinking about coming to this area, you have a whole lot more opportunity now to find what you're looking for. Anyway, that's that. Like I said, I'm a numbers nerd and hope I didn't put anyone to sleep with this. But I do find it interesting. We like to see which way the market's going, what's coming. This has been a look at the past and how the most recent past compares to a year ago, of course. We'd also like to know what's going to happen coming up. So if you have any questions, leave them in the comments. Hit the like and subscribe. I always appreciate that. And let's have a dialogue if you'd like to talk, either in the comments or give me a call. And until next time, thanks for watching.